And welcome back to the program. It's Capital Market Live on Channels Television. Yeah, before we went on break, we were looking at the debt market here in Nigeria as to the latest in terms of the sukuk offering by the federal government, the Euro bonds. And of course, this week we know that some over 640 billion naira was mopped up in open market operations by the Central Bank of Nigeria. Here on the program with me is still Nnamdi Olisailoka, who is a fixed income analyst with Zedcrest Capital. Nnamdi, thanks for staying with us, actually. But let's look at this raft of open market operations that the CBN suddenly came up with this week, Monday, Tuesday, Wednesday, and of course Thursday, except for yesterday, we had consistent open market operations at a fixed stop rate. Give us a sense of what is actually happening, what is going on precisely, why are we seeing these regular auctions?
All right, so yeah, the last time I was here, I told you that we are bearish because there are sentiments we're seeing. We are risk-off sentiments in emerging markets. There was global monetary tightening in global markets.
Yeah.
And we posited that rates still had room to rise higher. From that time, I explained to you. And at that time, the CBN just used to intervene in the market once a week on Thursdays at 12.15%.
And a whole lot of time, it comes in at just $210 million.
That's for the FX, but I mean for the OMO auctions. At 12.15%, they used to intervene every Thursday.
Exactly, but that has overshot now.
To mop up maturity. So what we first saw was that the CBN elongated the tenor of offering. They used to offer mid tenors around 200 to 270 days before. They elongated the tenor to above 300 days and at a rate of 13.5%. So that caused the yields to spike on the short end of the curve. That's the one-year tenor. It caused yields to spike on that end. And after that, the CBN remained persistent at that level, issuing, mopping up maturities once a week at that rate. But we've seen, as the CBN came out to say that they were wary, despite the fact that they held rates at 14% MPR at the last monetary policy meeting for this year.
Okay.
We noted that the CBN still remained hawkish in their approach to liquidity management. They still maintained that they were wary of inflationary pressures. They were wary of political risk sentiments ahead of the forthcoming elections, and they also wary of the monetary tightening in global markets and emerging markets weaknesses, and due to foreign FX reversals by foreign portfolio investors. So all this has informed the CBN to adopt a more pragmatic approach to managing systemic liquidity and to ensuring that they do not have so much depletion of the reserves or outflows of FX by the foreign portfolio investors. So the increase in rates is to just ensure that foreign portfolio investors and also local investors remain attracted to the offerings by the central bank. So what you're saying, from what you just said, we saw that the CBN increased the speed of HOMO issuances between last week and this week.
Yeah.
So what happened last week was that there were fact payments that came into the system, which also bolstered system liquidity significantly higher.
And then that needs to be mopped up.
So we saw the CBN conduct three OMO auctions last week, and that was when they began to increase the rate. So it was from, we saw the rates go as high as from 13.5% to 14.5%. Then this week we've seen the rate go as high as 15%, following 4 consecutive OMO auctions that stopped on Thursday. So there was no OMO auction on Friday because of the retail FX intervention by the CBN, which mopped up most of the liquidity, with system liquidity now below 100 billion naira.
Really?
Yeah.
And that also has its own impact on the money supply, the M2, basically. Okay, so but then let's look at the stop rates again. In anticipation of DMO circular for this month's auction, what do you think will happen to the rates?
Okay, so the DMO has said that there will be no NTB auction for the month of December. Remember last year?
Bond auction or NTB auction?
NTB auction.
Okay.
I'll talk about the bonds. But for NTB, there will be no NTB auction for the month of December.
Okay.
Reason being that, remember last year, the DMO raised $3 billion in Euro bonds, and they used part of that to refinance to refinance domestic debt, that's
Yeah.
treasury bills.
Yeah.
So they're able to pay down most maturities in December last year. So that was why we saw very minimal issuances in December. And so we also have about 78 billion of NTB maturing in December, and they have come out to say they're going to pay all down. So we're not expected to see any PME auction for the month of December. But in the bond space, the DMO has shifted the bond auction from 12th of December. We should have held next week Wednesday to 19th December, which is in 2 weeks' time. And we expect about between, I think, 75 to 100 billion naira to be on offer at the auction.
Okay. But then, given the rates that we now have been flattish in recent times at the OMO auctions and all of that, how far can that remain? Do you think there's going to be any form of contraction going forward?
Okay, so I said we were...
We did bear in mind that we're having this daily auction consistently,
right.
you know.
So I said we were bearish, but at this point, we're now slightly cautious. We're no longer outrightly bearish. Rates are beginning to flatten out. There's still scope for short-term rates to rise. But if you look critically at the curve, we are slightly inverting. So the longer end of the curve is slightly lower than the shorter end of the curve. There's pressure on the short end of the curve. The 1-year rate is as high as 17.6%, and it's also pressuring the 1-year and 2-year bond. But if you come further down the curve, you see that most of the other maturities are below 16% at the moment. And investors have not sold off beyond that level. We keep seeing intermittent demand on the longer end of the curve. What it's telling you is that investors are pricing in the risk of the political risk sentiments, which are currently on the burner, on the front burner. But in the longer term, rates will not be expected to be so much aggressively higher unless when there's a significant factor that would spike those rates. So we're not outrightly bearish at this point.
What does this say about the maturities that are in the that we're likely to see in the next few weeks? We're supposed to have, I think, one next week or upper week.
The OMO maturities.
Yeah.
The CBN will continue to mop up. Like I said, there's still scope for short-term rates to rise. The CBN, we are currently at 15%. That's the interest rate.
Yeah.
The discount rate on the longest yield, the longest treasury bill available is at 15%, with the true yield at about 17.6%. The CBN could still take rates as high as 16%, the discount rate, with us seeing yields go as high as 18%. That's possible. But we will not see as much impact on the longer end of the curve as it will be on the short end of the curve. So we'll just see a curve that inverts, with market players pricing the treasury bills higher than the longer maturing bonds.
This is really serious. But then again, on the final notes now, the secondary market generally has been cold in the past few weeks. What's also going on? I know we are bearish, like you said, but then is there anything that could actually change? Could it be that investors have been waiting for what will come in from? Of course, we've been waiting for the circular for the 100 billion naira sukuk. That is out now. Investors are keen into it, but then we're still waiting for the PME bond auction that is supposed to come in 2 weeks' time, as you said.
Well, like I said, the sentiment is now benign. It's flattish for the bonds. It's flattish for bonds because there's slightly improving macroeconomic indicators.
In spite of the preparation for general election.
Yes, slightly improving macroeconomic indicators. GDP will be released tomorrow. Analysts expect that due to the pickup in the oil sector, both volume and price of oil prices, that there should be moderate growth above what we saw in the last quarter. So the only risk of sentiment we have is the forthcoming elections, and also we saw that the U.S. Fed had moderated its tone.
Basically, the external factors are going to be leaving its own negative impacts on us.
But the external factors are also moderating. Also moderating. So we just seen the CBN be more pragmatic in managing. So
investors will now have to be pricing that in for next year and all that. Olisaemeka, thank you very much for your attention. Thank you for making it down to the program this evening. We appreciate your time. And Olisaemeka is, of course, a fixed income analyst with Zedcrest Capital. And that's all the time we have this evening on Capital Markets. Thank you for being a part of it. We'll see you again next time. I'm Temple Ashaju. Bye for now.